The last example that we're going to look at in chapter 20 is an overview of what we can do with CVP analysis. So we have this company, a farm, which raises fish for sale in the aquarium trade. So we're trying to decide whether we should invest in maroon clownfish or queen angelfish. We have a lot of information here about the two different kinds of fish. The angelfish are more expensive. With our current facilities, we can raise 10% of clownfish or 5% of the angelfish eggs, how long they take to grow, how much we can sell them for, what our various costs are. And what we want to decide is what species should we raise to earn the highest operating income. So we only have the resources to pick one species. And what we're going to do is a cost volume profit analysis to determine what that idea is. So we need to know how many fish are we going to have available for sale. We're going to buy 1 million eggs, and for clownfish, 10,000 of them are going to live to saleable maturity, and for angelfish, 5% of them are. So the number of fish, we're going to take 1 million times 10% for clownfish, and 1 million times 5% for angelfish. Our sales price, you can see didn't get added in here, for clownfish is $4 each, and for angelfish is $10 each. So our total revenue for angelfish is 50,000 times 10, and our revenue for clownfish is 100,000 times 4. Now we need to look at what are our variable costs. So we have cost of eggs. The clownfish eggs are 5,500 and the angelfish eggs are 9,500. Then our feedings. So our feedings, we have $150 per week. So each week we need 2 water changes and 20 feedings, and clownfish need 1 water change and 15 feedings. So we have our various feedings. So we have 35 weeks for clownfish, 15 feedings per week, and $150 for our feedings. So 35 times 20 times $150. That was times 15 for clownfish. Okay. And for angelfish, we have 50 weeks times 20 feedings times $150. So 50 times 20 times 150. Next, we have our water changes. So we have water changes, clownfish 1 a week, and water changes are $1,000 per week. So we're going to take 35 times 1,000. And for angelfish, we need 2 per week and 50 weeks. So 50 times 2 times a cost of $1,000. Next, we have heat and lighting. We look in our examples, it says heat and lighting costs equal 400 per week. So we have 400 times 35 weeks for clownfish and 400 times 50 weeks for angelfish. So our total variable costs for angelfish, we add those up, and our total variable costs for clownfish. So now we have a contribution margin. We take our revenues minus variable costs. So revenue minus variable costs gives us our contribution margin. And then minus our fixed costs. Says that our fixed costs are $80,000. So our operating income, total contribution margin minus fixed costs. So we have a higher operating income with clownfish. So if we were just wanting to decide which one gave us a higher operating income, our choice would be clownfish. The next question says, other than fixed costs, which factors of cost have the greatest influence on operating income? So that's actually our feedings and our water changes. So those are our variable costs that have the greatest influence on operating income, because we can see because of the additional number of water changes that angelfish need, they need 2 per week versus 1 per week. That increases our costs significantly. Now we want to say we're thinking about making some improvements. We can only choose one of them. So we have either a filter, which is going to improve our water quality, which increases survival rates. It also decreases the need for water changes, but it would increase our feeding costs. Or the other choice is to install more efficient equipment that will reduce heating and lighting costs by $100 per week. This will also improve the survival rate, but has no expected increase to food cost. So if we could make this $8,000 investment, then what would our changes be? So now we're going to increase the number of saleable fish we have. So clownfish are going to go up to a 12%. So we have 1 million times 12%. And for angelfish, our new survival rate is 6%, 0.06. Our sales price remains the same, but because we have higher numbers, our sales revenue is going to increase. So our cost for eggs stays the same. There's no change, but our feedings are going to go up. We don't increase the number of feedings, so we still have 35 weeks for clownfish, 50 weeks for angelfish, 20 feedings per week and 15 feedings per week, but now they're $160. So we have 35 times 15 times 160 and 50 times 20 times 160. Our water changes are going to decrease. Now we only need 1 a week for angelfish. So we have 50 weeks times $1,000 per water change. And we have 35 times $1,000 for water changes. Our heating and lighting costs stay exactly the same as they were in our previous. So now our total variable costs with the increased feedings and the decrease in water changes. So contribution margin is total revenue minus variable costs. Our fixed costs now are $88,000 because we made that $8,000 investment to our original fixed costs. So total contribution margin minus fixed costs. Now angelfish are more profitable. Not only that, but that $8,000 investment in filtration costs raises our operating income from $140,500 to $272,500. That's a pretty significant return on an $8,000 investment. Then we're going to look at the second option. What if instead we went with the reduced heating and lighting costs? So here we're going to reduce the heating and lighting costs. So we have a survival rate of 10.5% and 5.5%. So we have million times 10.5% and a million times 5.5%. Same sale price. Now our variable costs go back to what they were in our first example. So we have 5,500 for eggs and 9,500 for eggs. Our feedings don't change if we reduce our heating costs. Our water changes are the same as the first example. Now our heating and lighting changes. Instead of $400 a week, we're $300 a week. So 300 times 35 weeks and 300 times 50 weeks. Total variable costs, we add those together. Contribution margin is revenue minus variable costs. Our fixed costs are $88,000. And now our operating income, contribution margin minus fixed costs. Okay. So we can see in looking at these different alternatives for an $8,000 investment that we can make this $8,000 investment in the water filtration system and raise angelfish for a projected income of $272,500.